Welcome back. It's been another up week. So we had some pretty good follow through from last week's bounce back on oversold conditions. It's amazing to me. I mean, if you look at the headlines, burning tankers in the Gulf and things like that, that there isn't any sort of volatility or reaction in the market given all the geopolitical tensions that we're seeing with Iran and so forth. I mean, we're seeing it a little bit in the commodity markets, oil, but otherwise it's a pretty tame market. So um, the international news, I mean, other things we got this week were Boris Johnson in the UK won the first round, so the Brexit soap opera keeps unfolding. Obviously, what happens within the Conservative Party there is they have an election. They continue to have elections until they narrow it down to a candidate. So things will get more interesting very soon there. So the other big news was on the M&A front. There continues to be a huge amount of M&A activity and IPOs. This is a fantastic environment. Obviously, low interest rates, low inflation. Debt is cheap. That creates unique situations for large companies. So the big merger news today was Raytheon merging with United Technologies. We've seen this sort of dance before between United Technologies and Honeywell. It seems now that United Technologies is doubling down on the defense business and wants to shed some of its more industrial assets. So we'll see. That's a stock deal. The question for investors is bigger. Is that really better, or is this more of a defensive move for some of these industrial cyclical type companies? On the defense side, the negative is things are as good as they get in the defense contracting side right now. But if we look down a couple of years down the road, political, there is an election obviously in the U.S. and it's unclear whether defense spending will continue at the same level or not. So we're a little bit more cautious on the defense sector and industrial sector. I mean, we've said before we would prefer to fade more cyclical exposure at this point in the cycle. The other part that's very interesting this week is, and that came really from our friends at ISI, Ed Hyman, who we obviously work with for 20, 25 years. Ed Hyman is the best when it comes to economics. He basically says, don't fight the Fed, and we're now in a full blown global easing cycle. The Fed is expected to ease given the inversion of the yield curve. China is injecting liquidity as well to prop up its economy, given all the dislocations we're seeing on the tariff side, on the trade war. Even we see this now in Russia. Russia lowered rates, so the whole globe is in an easing cycle, which is very surprising. If you think about just 2 or 3 months ago, it would have been unheard of to think we're in a global easing cycle. So the message is don't fight the Fed. And as Ed says, this is good for asset prices, certainly good for equities. Look, the S&P is up about 16 or 17% year to date. That's quite a move already. But if inflation stays down, interest rates are going lower. This creates a very interesting move for the stock market. So it's interesting just on the stock specific side. I mean, you saw the tanker news today, but there's a little article on the right here on the Wall Street Journal on Facebook, and Facebook has been in the news a lot, obviously with Google and all the re-regulation or regulation that we're seeing coming down the pike. So last week, Facebook and Google were our worst performers for the week. This week, Facebook is our best performer for the week, and the reason is. It's so interesting, and we see this every cycle. The government is always like 10 steps behind the technology companies. So they're still fighting the last battle when it comes to trying to regulate these tech companies. Facebook is already looking at what's the future of their business model. And it's fascinating to see that they have now they've been quietly working on actually their own version of a digital currency, and they call this currency, actually it's been leaked out. It's called Libra or Libra. I'm sure it's called Libra, but and it's very interesting if you think about it. If you think about the fact that Facebook connects about 2 billion people around the world, it's only natural that at some point they become a player in this payment market. So, it's very fascinating to see that Facebook is in talks with Visa, MasterCard, PayPal, even Uber, as companies like that, really cutting edge companies that are in the payment space, in the mobility space, where Facebook's platform could be used as a way to use a payment system and using its own digital currency. So, if you think about Facebook's business model today, it's based on advertising and basically mining your data and freely, you're using their services for free, obviously, but you're giving them your private data and they monetize that. That's the business model of today. If you think 10 years ahead, I would predict that Facebook's business model will be completely different. It won't be based on an advertising model anymore, and the same could go for Google and the others as well, but something where it becomes a closed system where either they charge, like where Amazon Prime, some sort of a user fee where you're not bombarded with a whole bunch of advertising, but they will still want to reward you for using your data, and that is something that they will do by giving you rewards points or a currency that you can then use to basically spend on whatever you want to spend it on. So this is very interesting to us. I mean, they're already testing this out in their messenger, obviously their messenger platforms, WhatsApp, that a lot of people use, or Messenger, are, I mean, these are two encrypted platforms. So these two platforms are not subject to being data mined, at least they say, data mined in terms of data coming in to see what you're doing. So WhatsApp right now is being tested in India as a payment platform. So they're quietly testing this model already in some of these places. So it's not surprising to us that these efforts are happening. I mean, we would say to the government, look, if you want to break up Facebook, it doesn't really change our view of the stock. Even if they broke it up today into Instagram and Messenger and WhatsApp and the old Facebook, which is the news feeds, the value that would be unlocked in just the Instagram platform would be enormous. I mean, if you look at Facebook today, it's selling at like 18 times earnings. I think Instagram is worth a lot more than that. So in terms of government activity, it's obviously the headline risk is always there, but I think they're fighting the previous battle. So Facebook is quietly doing the right thing. They're being innovative. They're looking at the future. They're not standing still and being reactive to the last problems. So we continue to like that stock. So on that note, we saw the NBA final last night. The Canadians are now are the champions in the NBA. Again, I thought I'd never see that. I think one of the great things at the end of the game was how both teams stayed on the field and congratulated themselves. It was nice to see this kind of civility. It would be nice if we could see that in international trade and diplomacy and so forth. So on that note, I wish you all a good weekend. Take care.